Statement of cash flows. And this is very important part that we will be discussing for this statement of cash flows. Obviously, it's a practice. In this module, we will be focusing on the current year balance sheet and the previous year's balance sheet. So out of these two balance sheets, we will work out statement of cash flows. Remember that this type of questions are examination type questions. So put very special focus on learning this practice question, that how we will be working out statement of cash flows with the help of two balance sheets only. So see how the information will be worked out in this module. Here we have a practice question where we have balance sheet, as I told you, for the year 2000x9 and for the year 2000x8. Okay, in a way as on its closing dates. We have fixed assets with us, we have investment with us, we have current assets with us, we have owner's equity with us. Okay, and we have liabilities with us. In this liabilities, we have current liabilities with us along with some non-current liabilities. Okay, well, let's see that how to work out the cash flow information from this. A very special focus would be required on this part, because we know very well that among this owner's equity figure, there is an information which is hidden in this, and that is opening and closing balance of retained profit. Okay, because we know retained profit is part of owner's equity. So the details of owner's equity are not given here. All right, let's see what happens. In other information, it's given that drawings during the year were 8,000 and fresh capital introduced was 15,000. And by the way, these two information are about the owner's equity that I was saying that special attention is required in this area. Okay, well, and this information is about calculating cash flow relating to the investing activity, because we know that investing activity is something which is about non-current assets. So we will focus it at the time when we will be preparing cash flow figure for investing activity. Well, so in this operating activity, we have to work out this working for first. Why? Because without this working, we cannot get this 5,000 figure, because in the question we see that there is nothing relating to the profit figure, and here we are calculating net profit figure. Well, how to calculate this? Just focus on this working for first. Okay, we will take closing capital of 30,000. Okay, from the balance sheet. You remember that I encircled this closing capital and opening capital, and drawings and fresh capital. You will get this net profit figure. Okay, so this is again a mathematical equation in which when you will set out the things at the other side of the equation, the positive will get negative and negative will get positive. Normally we know that if we have opening capital, we add fresh capital, we subtract drawings, and we add net profit to get this closing capital figure. But when we are working from closing capital to downwards, then all this action will be reversed. Drawing will be added, fresh capital will be subtracted, opening capital will be subtracted to get net profit. Once we get this net profit figure, then we place it over here to start working to calculate operating activity. Remember that this is the indirect method that we will be working in this question. We will add financial charges and we'll subtract other income to get profit from operation. As I have discussed with you earlier, that if we have this profit from operation figure, put it directly over here and start the question. But if we don't have, then we have to work out this profit from operation figure. Again, just focus that this is the reverse order that we are working. Normally, from profit from operation, we add other income and we subtract financial charges to get net profit. But in reverse order, we will be doing positive to negative, negative to positive. Well, and then add back non-cash operating expenses which are relating to non-current assets, okay, which are depreciation and loss on disposal. In this case, we have to add in this operating profit figure. So how to calculate this depreciation? See working 2. Here we go, working 2. Okay, we have opening balance of accumulated depreciation and closing balance of accumulated depreciation figure with us. Where? Yes, over here. That machine costing 6,000 having net book value of 4,800 was sold for a loss of 1,200. Okay, so this 3 information is given over here, and about the accumulated depreciation, this information is given in the balance sheet. Provision for depreciation is the accumulated depreciation. So cost is given, okay, and accumulated depreciation is given. Now focus over here. So we have all this information with us. Put opening balance of fixed asset and closing balance of fixed asset. Again, I'll say that this working 1, 2, and 3 will be easy for you if you have grip on accounting for fixed assets. All right. Well, so we have the cost of asset which was disposed of. Balancing figure is addition in the fixed asset. So this balancing figure is cash flow item under investing activity. Okay, you can mark I over here. Well, then for accumulated depreciation, opening balance is here and here. And here we go. It is depreciation expense for the year, and it is the accumulated depreciation representing the asset disposed of. This is given in the question, or we can work out. How we can work out? Yes. If we know the cost of the asset disposed of, and we know the net book value of the asset which is disposed of, so the balance is accumulated depreciation in between. So by the way, its loss is also given, which is 1,200, and by chance its accumulated depreciation is also 1,200. So let's see that this accumulated depreciation which is related to the asset disposed of is 1,200. We will place this accumulated depreciation here in the disposal account. We know very well that how to prepare disposal account. We know that loss on disposal of asset comes here, and this is the balancing figure for which we have received cash while disposing of this fixed asset. Well, so this working is done. So what we see that we have loss on disposal figure coming from the question. We have depreciation figure. We have worked it out in working 2. And then we have to make adjustments for working capital items. Okay. Debtors increased by, subtract. Stock decreased by, add. Prepaid expenses decreased by, add. Creditors decreased by, subtract. Accrued expenses increased by, add. All right. By chance, its net effect is 0. Okay. So its net effect will be placed in the outer column, and this outer column will give us cash generated from operation figure. So in order to work out operating activity, we have to put cash generated from operation, and then interest received and interest paid figures are placed under this, so that we get the figure for cash flow from operating activity. Remember one thing, in this question we don't have opening and closing due. That's why exactly the interest income is equal to interest received, and interest paid is equal to interest expense. Okay. According to International Accounting Standard, we have to present separately interest received and interest paid figure. That's why even this receipt and payment is equal to the income and expense respectively. Even then, we have to work it out as we are working this in this question, that first get rid of this interest income and interest expense as we worked out there. Okay, get rid of it by reverse calculation. Okay, and then you have to show it as a separate item, interest received and interest paid. It is the requirement of IAS 7. Well, then investing activity comes, in which this information is exactly worked out in working 1, 2 and 3. So we have already discussed it. We have already discussed this. And investment purchased is 10,000. This is what we are picking up from the balance sheet. We see that there is an investment of 10,000 which is appearing in the current year balance sheet, which was 0 in the previous year. It means that during the year we made this investment. So that is a cash outflow will be taken over here within brackets. So total amount of cash outflow from investing activity is 22,400. Then comes financing activity. We have issued capital of 15,000. It is given in the question, or in a way it is a fresh capital, and it is drawings. Okay, so this is the information given there, and loan taken is 7,000. Well, total amount of cash flow from financing activity is 14,000. Net amount is 2,000. Add opening cash and cash equivalent, which is given in the balance sheet. Opening balance of cash is 2. We get closing balance of cash and cash equivalent. This is how we prepare statement of cash flows under this method, where we have two balance sheets with us, opening and closing. So the important tips to remember in this module are very important to focus. Okay, so the thing is that we have to take special care for non-cash items. Okay, sometimes what happens that there is revaluation of fixed asset. This revaluation of fixed asset is causing increase or decrease in the opening balance of the fixed asset. So such increase or decrease is not because of payment or receipt of cash. Then issue of bonus shares, it is also non-cash item. And what we see that whatsoever the non-cash item is, we will not consider that in the statement of cash flows, because statement of cash flows in fact shows the cash inflow and cash outflow items only. Remember. Okay. And then interest and dividend received. This can be presented as an item of operating activity as well as an item of investing activity, interest and dividend received, because it is mentioned in the standard that either of these two methods are correct. Since it is coming from income statement, we will put it in the operating activity. But if we will consider it as if we are earning it through making investments, it will become investing activity. So either of these two methods will be taken. In the same way, interest and dividend paid can be operating activity as well as it can be our financing activity. Since it is appearing in the statement of profit loss, I'm talking about interest charges. So it will be taken to operating. But at the same time, this interest expense is being made because of the loan that we took. So from that scenario, it becomes our financing activity. So the same dividend, we say that it is financing activity. Otherwise, we can take it in the operating activity as well. It is mentioned in the standard IS 7. Then comes operating, investing and financing activities. The thing is that any information which is in the income statement in general, in general, there could be some exceptions. In general, any information in the income statement, the cash belonging to that income statement item will be placed under operating activity. Okay? And the cash flow relating to the non-current assets, again I am saying in general, non-current assets will be taken in the investing activity, and cash flows relating to, when I'm saying cash flows, it covers cash inflow and outflow. Okay? Cash flows relating to the items of owner's equity and non-current liabilities come under financing activity. Here, the loan which is short term, that is although a current liability, but since it's a loan, it also comes under the financing activity. Okay? Also very important tip to remember. And finally, the changes in current assets and current liabilities. What we do, we put these changes in the operating activity, but special care is required over here also. And what is that special care? That is the working capital items which belong to the operations, means inventory, receivables, payables, or operating expenses. Okay? The current asset items or current liabilities items which belong to the operations will be worked out under the operating activity. Okay? As we see that increase in inventory, decrease in inventory, or increase in receivables, decrease in receivables, these are worked out in the operating activity. Yes, if there is a current liability which relates to the purchase of fixed assets, supposedly we purchase fixed assets on credit, so that current liability, the increase or decrease in that current liability should not be worked out under operating, because it does not have any connection with operating activity. Okay? So the special care is required over here while working out adjustments for working capital items in the operating activity. So that's all about your statement of cash flows. But remember, you have to do a lot practice to have good grip on this statement of cash flows. So keep remembering these ITTRs. Thank you.